Huh. Well, my sound is a little bit screwed up here for OBS. It's okay though. It's okay though. Hey guys, how's it going? Let's come over to the charts. Okay, listen. So, not too much actually happened last night. Let's start with the treasury, man. Yesterday, whoosh, it came all the way back. I wish I'd shorted that, but you know, I had reasons to stay out. I mean, for a scalp, didn't make much sense. For a swing, maybe it would have made sense. Maybe I should have tried swinging that. I don't know. But we're kind of just back to, the prices from before. So I'm not necessarily convinced that we're going straight back to 2% at the moment, at least not at the moment. In the S&P 500, you can see they did fairly well yesterday, but again, overnight it's just been really constrained. Oil did take another little clip higher though. Natural gas, let's see. Natural gas kind of doing a similar thing. Gold and silver not going too hard. Copper's looking good, man. Copper is going. That could be a problem. That could be a problem. And then we come over into Bitcoin. Bitcoin maybe coming back a little bit now, and the dollar's still hanging out around 97.5. So where we're at right now is essentially we are going to get some news here in like 17 seconds. Initial jobless claims expected 225. Okay, so let's sit here, see what happens with that. Energy journalist Zandi have received definitive news that within the next 72 hours, a nuclear deal will be signed in Vienna, even if it might take a couple of days more or so. What appears to be certain is that the deal will be reached. Iran's oil is returning to the market under golden circumstances. Okay, and the initial jobless claims comes in at 215K, slightly under the expected 225K, which is good. It does look like the treasuries are going to be selling it a little bit. Liquidity extremely light.
476 is higher than the forecast of 1.
There's not much else in there. We do have market services, PMIs, not ISM, non-manufacturing PMIs. Powell will be speaking for a second day. There's a lot of news at 10 o'clock today, so you want to keep your eye on that. We'll see where the treasuries go here. It's kind of funny. They did have a little bit of a buy on the open, but that is coming back. So, and then there are talks ongoing at the moment in Ukraine. So we've got a lot of stuff going on, and the market's kind of been quiet, waiting for all of that to pass. I don't expect the trading here for us early in the morning to be too great, but after 10 o'clock, we might get some interesting stuff. But that piece of news that I just heard on Iran, that sounds like a decent reason for a short. I'm sure that is probably why they came back off from 113. But I think that we could probably see further downside in oil. That supply hitting the market is really a critical thing here. I think because oil supplies are just absolutely terrible right now. What's going on here?
2022, also available on the feed for those interested.
For a collection of people with logical disorders, if there is fire and the government happens to say that there is fire, there is no fire. In other words, that the government got something wrong means it's always wrong, and conspiratorial weirdos are always right. That's true. When you talk about your government, do not nitpick salient errors, but evaluate. AG2 benchmarks to totalitarian regimes and total anarchy, which is Libya. I witnessed firsthand how anarchy unavoidably brings the rule of warlords, aka mafia dons. That was from Nassim Nicholas Taleb. is true. I mean, what he says is 100% true, but where do you go when from there, when you get a piece of information from the government? How do you know if it's reliable intel or not? For instance, like a relevant point right now is how well is Ukraine actually
German
doing?
Economy Minister Habeck adding
How
that
well
the
is the
embargo would
Ukrainian government doing against Russia? Because they have every incentive to exaggerate how well they're doing for propaganda reasons. And frankly, the West has a reason to only share information with us that would be positive. So if there was a relevant headline that came out that was relevant to us in the markets, you may run into a situation where you just don't know how reliable that information is at the moment. Certainly, though, it seems to me that sometimes you can trust. Well, sometimes you can, and sometimes you can't trust U.S. Western intelligence, but you can almost always not trust Russian intelligence. It seems to me. This is the one that kind of gets to me. Maybe I should tweet that at him. Nah. Okay, so you know what? I want to do a little bit of research here this morning because somebody was talking about the output gap. And I want to know, how is that measured? I want to know, how is that measured? An economy's output of goods and services declines. One thing that concerns economists and is how close the current output is to the economy's long-term potential output. That is, they are interested not only in whether GDP is going up or down, between the actual output of the economy and its potential output. Nah, that's not telling me exactly how it is measured. Uh, 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 uh. Here's a paper from the St. Louis Fed. I probably need to go to Fred. Hmm? Peter Carr, brilliant mind and always very enthusiastic about his quant work and to explain and discuss. Rest in peace. And Leb will be standing in for him in his classes, apparently. Okay. German economy minister Habeck would oppose embargo on imports of Russian energy. Yeah, I'm sure. GDP indicates the size of the economy by measuring the economy's output. It is also one of the key measures economists use to assess the health of the economy. For GDP to measure the real increase or decrease in output over time, however, the effect of price changes needs to be removed from the data. Real GDP does that. It controls for inflation and more accurately reflects actual economic growth. But knowing the size of the economy and its growth rate only tells part of the story. For a more complete assessment of the economy's health, it is helpful to compare how much of the economy is producing with how much it could be producing. Economists do this by comparing the economy's actual output, which GDP tells us, with its potential output. Aha. Potential output is an estimate of what an economy could feasibly produce when it fully employs its available economic resources. The Congressional Budget Office estimates potential output by estimating potential GDP, which it describes as the economy's maximum sustainable output. The word sustainable is important, but it doesn't mean that the entire working age population. Blah, 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 blah. You probably don't need to hear all that stuff. Potential output, estimated as a real potential GDP, serves as an important benchmark level against which actual output, measured as real GDP, can be compared with at any given time. In short, economists use potential output to represent a normal or benchmark level of output against which actual output can be compared. So this person kind of builds the output gap as a difference between how much people are, how much what output compared to consumption. It is not the case. It is not the case. So this person's entire approach is flawed. But let's read on. I want to make sure I really understand. Of course, there might be a difference between actual output and potential output, although rare. It's possible for actual output to be higher than potential output. It's far more common, though, for actual output to be lower than potential output. The difference between actual output and potential output is called the output gap, which is expressed as a percentage of potential output. The short run fluctuations of actual output around potential output determine the business cycle, economic expansions, and contractions, or
Ukraine-Russia talks is due
recessions.
to take place today. Sources earlier did state that it would be taking place at 9 a.m. Eastern Time. Of course, we may hear comments coming through after the meeting is complete about what was discussed. So just keep that in your minds during the session today.
And there is our output gap, of course. Oh, it kind of projects. It projects the output into the future. That's cool. Potential gross domestic product and real gross domestic product. But that, well, okay, so now we need to come back to GDP. How is GDP measured? Because it's just the value of all finished goods and services produced within a country's border within a specific time period. So I forget what is the argument against GDP? I remember there being this whole thing about it's not very accurate, blah 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 blah. That dish should not be going. Better. GDP has to do with output. GDP versus consumption. Well, GDP is the sum of all final expenses or the total economic output of an economy within a specified accounting period. It does not include the output of its underground economy. Okay. Consumption, investment, government, net exports. Cool. This is all. Some of this stuff is all things that like I've read before, but it's not like something that I would like commit to memory. You know what I mean? Consumer spending contributes almost 70% of the total net United States production. Note that the figures reported are real GDP. It's the best way to compare different real years. Goods and services, blah, 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 blah. Okay, but up here at the top, they said it does not include the output of its underground economy. Does that mean like illegal stuff? Durable goods and services.
So looking now to the day ahead, so we are seeing today at 10 a.m. Eastern Time the release of the ISM data, US ISM non-manufacturing PMI, the headline figure there at 10 a.m. Eastern Time. Also comments from Fed's Powell testifying at 10 a.m. Eastern Time today. The Fed's chair Powell is making the inflation fight his top priority over the risks of Russia's attack, backing a quarter point interest rate hike this month, as he stated during his testimony yesterday. Again, he is speaking today at 10 a.m. Eastern Time.
What's this link take me to? Personal consumption expenditures, maybe. So I don't want the PCE because that's just telling me the price of things, right? We know that the price of things has gone up. The problem is how much of that is, well, I don't know. Here's the thing. If you didn't do the stimulus, prices would be lower. Like straight up. You can, because it's a two-part equation, right? There's how much people have to spend and how much goods are available. Let's not say produced, let's say available, because they're somewhat being produced, but the supply chain is blocked, so they can't get to the people, right? So we're saying the amount of people that money that people have to spend has increased, but the supply chain issues are not keeping up with it, and so the prices have gone up. Hmm. See, I can see how someone would try and argue that the output gap should include everything, but I don't think that the output gap is really a very accurate measurement of the key metric that we're trying to measure here, right? What I really want to know is what are total personal consumption expenditures compared to what production is, right? And you would have to do it worldwide. But let's see here. If we come here to Fred, or there may be. Oh, come on! I know there's a way to do this where it will show you where you can kind of go to related things. Oh, I can make that smaller for starters. Personal income and outlays. Here we go. Personal consumption expenditures, real personal consumption expenditures. Uh-huh. It seems to me like the output gap is not because of personal consumption expenditures, is it? Wait, so let's come back over here. Goods and services, business investment. Uh-huh. Government spending, net exports.
According to a TASS reporter here, Ukrainian delegation has arrived for talks with Russia in Belarus.
Okay, it sounds like the delegation for the negotiations from Ukraine have arrived in Belarus. Mm-hmm. 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 I see. Well, there's probably your answer right there, right? What do you guys think? I would have thought that you guys would have loved to talk about the stimulus. Let's see here. Government spending. Federal government current expenditures. And what is the other one? Business investment. Net domestic investment. So that just kind of followed the overall change in things. So what did we see? What do we see? Most of these things. So here are the 4 different components, right? Real personal consumption, which took a dive during the pandemic and came back really hard in 2021. And is, I would say, though, roughly in line with what it should be. Net export of goods, though, down and not really recovered. And government expenditures high and coming back. Net domestic investment. And then we come back to real GDP on Fred. And we get this right here, which is that it's still not quite back to where it was. But net exports are down. Net exports are down. Interesting. Did I miss something there? I feel like I'm missing something still. Consumption, government spending, investment, and net exports. The production approach is essentially the reverse of the expenditure approach. Instead of measuring the input costs that contribute to economic activity, the production approach estimates the total value of economic output and deducts the cost of intermediate goods that are consumed in the process, like those of materials and services. Whereas the expenditure approach projects forward from costs, the production approach looks backward from the vantage point of a state of completed economic activity. The income approach represents a middle ground between the 2 other approaches to calculating GDP. The income approach calculates the income earned by all the factors of production in an economy, including wages paid to labor, the rent earned by land, the return on capital in the form of interest, and corporate profits. What do you think about market profile? Is it the same thing as no? Absolutely not. We were talking about this on TikTok the other day. I'll cover this here. I'll take a little break from our little research here to discuss this question. So if I come over here and I look at a chart, we should use a chart of something that's actually happening. Okay, so for instance, here on
Parliament approved
the Treasury, okay.
Russia or Russian.
So how do we look at the volume profile? Well, the first thing is that you just want to be able to read the chart, like what's going on here. And most volume profile kind of runs around this central idea. There are areas where there is high amounts of volume and there tends to be a distribution of, and when I say distribution, I just mean like the volume shows up on this. I'm not meaning that's like people taking profits or something like that. I just mean like there tends to be a distribution of volume around these areas. So you'll see these bell curves, right? Bell curve like that. right? And then there are key volume points. Okay, so this is what most people that look at the volume profile they're looking for, and based on what the profiles for the day are, that could mean different types of days. So let's see if I can find a better example here of. Okay, so for instance, here just before the FOMC, right? That one's probably not a very good example because that one did something different. Well, I'll come back to that one when we want to talk about errors and how people look at volume profile. Man, have we just not had? Okay, so here's one. Here's one. There was a lot of volume traded in the treasury before the FOMC meeting minutes that day. And this right here is kind of the pre-market action, right? So there was the overnight market. They moved down once the regular market started and had distribution. Then the minutes were released and they moved down, and there was another distribution area, right? So this is I guess this is a triple distribution, but this is the kind of day is like there's like a double distribution day, right? Whereas there are other days that are just single distributions like this, which is a lot of days. And then you got these days like yesterday where there's two distributions there, but the profile is pretty wild, isn't it? So this is a very disorganized distribution. In this particular instance, because of a strong trend today that people were very unprepared for, and just general market volatility. Okay. So the general way that they look at volume profile is they say, what does the volume profile look like? And then they try and determine what kind of day it is based on the volume profile. And then and this is where I'm kind of come into things that I do not agree with. Okay, just to note, but the general thinking is this: based on what kind of distribution the previous day was and where we open or are at today in relation to those distributions, I should be able to make predictions about where the market is going to go from there. Okay, and that is the gist of volume profile stuff. Okay. Now, the issue is just because a price was important yesterday doesn't mean that it will be important today. In fact, what we learn is that often these prices being important have absolutely nothing to do with what investors think about fundamental value or anything like that. These distributions often form because they just get stuck. Like there are a lot of people that want to trade. So many people trade in that one location, and then there's not enough liquidity anymore in that location. They come down here, there's too many buyers. They come up here, there's too many sellers, and they just get stuck. So it's not like an indication of agreement or anything like that. It is people traded there. It's actually kind of disagreement to some extent, but that it's not because there's something important about that price. It just kind of happens. It just kind of happens. They don't want it to happen there. Nobody would trade there if they knew what was going to happen. But it's just what's naturally going to happen when a bunch of people end up trading in the same spot. And that's what tends to happen is y'all end up trading in the same spot, and then you get a distribution around that spot. And when we're watching the volume profile, when we're watching not the volume profile, when we're watching the DOM over here, we can see them form. We can see them form. We can come in here and we'll see maybe it would happen at 12. You would see a ton of volume trade here in this location on this and this, right? There'd be big iceberg orders, or maybe a bunch of it traded there over time. Just lots of retail orders, perhaps less common, but happens. And then after that, nobody wants to hold a solid bid or offer in there. Like it trades back and forth, but nobody's willing to put up more than 300 So that's kind of what they're doing right now is like 300, right? But this is moving all around. When you get into a hole, it will be like it's like that for 45 minutes or more, right? That is the liquidity hole. And because we know what forms them and what causes them, we can identify that location and predict that it will show up over on this volume profile long before anybody on the profile sees it, right? Okay. So, how do we sort all of this out? Volume profile is really useful to understand what happened, right? Like on this chart here, I can see there was some balance in this area, some trades going both ways, and then they failed and moved lower, right? That's kind of what I can see from that. And then overnight we came back to this area. So probably what happened was it was just a really big meta order. It went way further than it should, and then this is the post meta order impact. So I wouldn't read anything too special about that price. 127.13 half. Right now, it's nothing special. Okay, at least from a fundamental perspective, there's nothing special about it, right? But the volume profile is really helpful to understand what happened, right? It's useful to understand what happened. I would like to know where the volume happened, right? But what are the mistakes that people make with it? Number one, just because there was a volume, a point of control yesterday does not mean that we're going to go back to that point of control. Okay. There's a lot of stats out there about if we open outside of the previous day's value area, that we're likely to go back into it and touch the point of control of that area. Those are some of the stats that these people try and do. The only reason that stat comes out the way that it is because of volatility. It has nothing to do with something being special about that price. Okay.
Access to data.
Number two mistake that I see a lot of them make is the point of control is very often the closing price. Do you see that right there?
Includes an estimate of 100.
That point of control is basically right where the index is closed for the day.
Purity, and there.
Sorry, let me turn him off.
Kilograms of uranium enriched up.
You shouldn't be hearing him. Anyways, the point of control, the reason so much volume traded there is because it was the close. So is that really right? The point of control being the close kind of, in my mind, makes it less important. The closing prices really aren't very important. Okay. So that's another really big mistake that they make. Another big mistake that people might make is like, why did that area have a lot of volume, right? Because usually it was just in that location for a long time. So what you might see sometimes is it will just trade in a range. Nobody's interested in it, and it's just kind of, but because it's been there for so long, it ends up being the most traded price, right? So it can be kind of deceptive. It's like people don't actually have interest in that area. They're okay with the price, or at least they have no reason to trade. That's why so much volume traded there. And it's very different from coming to a location where there was a lot of interest and a lot of really big trades both ways. You know what I mean? Right. Another thing is that a volume profile doesn't do a very good job of showing you relative volume relative to the days, right? It basically says this is the highest price for the day and size everything based off of that. Okay. But it could be possible that this day traded like 10 times more volume than this day. You wouldn't know that. Right. Also, doesn't really tell you like the balance between buyers and sellers. That's why we have cumulative delta here on this chart, right? So that you can see that, oh, okay, look at this. Price has really, really moved up, but actually, oh no, wait, that's the spread. That's the spread. I would have to come over to one of these charts to see, okay, they're buying or selling. By the way, equity's taken off here. Well, I've been yapping. Personally, I'm not sure I want to trade it at the moment, though, especially not with a jump like that. Now, was there? I think that the market may be jumping here on the Iran news. And by the way, no, remember when we mentioned that and we said, "Oh, that's a short," even though I don't trade oil. We're down $6. So I hope you oil traders traded that. Did you guys trade that? I hope you did. You're trading oil. That's an easy trade. Maybe I should have traded it. Bloomberg, there is no alternative to the US dollar as the world's reserve currency. Okay. So I probably gave you way more than you were looking for trades by John. I'm sorry. But here's the next lesson, and here's the key thing, because I've never seen your name before, and so if you want to understand what I'm doing on this channel and so forth, here's the key thing that you got to understand. The market is more statistically efficient than it is informationally efficient. That means that if you go and you look at the market and you do some sort of a statistical analysis of it based on some sort of price pattern that you think you see, or even frankly some sort of a pattern that you think you see in the volume profile, you're going to find that the statistics almost always come out to break even. Okay. But the market is not very informationally efficient, which means that the current price does not accurately reflect all available information. What happens is orders have a very strong effect on price. If you come in with a large meta order, it's going to move price accordingly. And so if we have a piece of news, for instance, this oil is a great example. Okay. The Iranian oil supply is coming online. So you would think that you would then go in and do a calculation and say, okay, based on what the current consumption numbers are, and we change the you're just hearing something from the news squawk. Okay, anyways, so all of the people that trade oil now hearing this headline and saying, "Oh, I should sell." So, how far down does the price go? Does it go to what the new correct calculation based on supply and demand should be? Well, there's probably some people trading that, but mostly what tends to happen is the degree to which it goes is related to how many orders come in. How many orders come in? I think in this situation, that might be a big change. I don't know. How much is Iranian oil supply? Let's go look. Iranian oil supply barrels per day. Iran is pumping about 2.5 million barrels per day. That would be a pretty big impact. That would be a pretty sizable portion of the world supply. Okay, so posted a market profile, volume profile. Well, I mean, market profile is, to me, market profile is just what they did before they really had the computers and the data that allowed them to make a volume profile. But at the same time, it's also really kind of fundamentally different because it has to do with how much time did you spend in a certain location rather than how much volume, and there can be differences between the two of them, right? But I think it's a really good idea to kind of get an idea of what happened. I'm just saying you got to be really careful about this idea that it's going to help you predict what's going to happen. And when I say predict, I mean like you take a trade, you given certain risk reward parameters, you'll have a certain expectancy. Tends not to work that way because again, the market is very statistically efficient, but it is not very informationally efficient, right? Because the price that we're going to get here in oil is related largely to how many orders are going to go through and not what the fundamental value of it is. The market will almost always either overcorrect or undercorrect. In this particular case, I think that they might undercorrect here. think they might actually undercorrect and not come back down as far as they maybe should, because there's just not enough volume traders in the oil market to get them there. Makes sense. Market's very statistically efficient, but not informationally efficient. And why is that? Because orders have a large impact, right? So if I come in here and I see a statistical aberration and I trade it, it's going to move the market, and on in general, it's going to make that statistical aberration disappear. And especially since it's probably a teeny tiny little aberration that we day traders are looking for, it goes away very, very quickly. Whereas when you're looking at these big events and the information that everybody should be looking at, although I guess there's a lot of technical only traders out there, right? Um, they're going to move it regardless of what the fundamental value is. You're always going to be off from the fundamental value. And then on top of all of that, the third thing, right? First thing was we can arbitrage out statistical variances very, very easily. Second one is that we don't move according to what the fundamental value is. We move according to how many orders they come through. But then the third thing is that there are large meta orders that are transacting in the market that are a very substantial portion of the market activity and have absolutely no informational content behind them. They're not trading because of fundamentals or they think it's going to go up or down. They're trading because they're trying to provide their clients exposure to a certain asset and they need to rebalance their portfolio. And so these large meta orders can come through into the market and have a very, very strong impact, even though they mean absolutely nothing. So that kind of provides problems for both of these things because one, any kind of statistical aberration that you can find is really just noise compared to what the meta orders are going to be, right? So you try taking a trade, and then the meta order is going to come and you get stopped out, right? And then two, they could move the market the complete opposite way from what the information suggests that it should, right? So what does that mean? Um, a more a more summary way of presenting this is current prices do not reflect all available information, and as such, trying to look at a chart to interpret everything that is going on in the market and predict where it's going to go next is kind of a fool's game. Once you really understand the way that the market moves. That doesn't mean that those tools are useless. It just means that if you're trying to if you think that a volume profile is going to be the thing that takes your trading to I'm losing every day to all of this, I'm a consistent and profitable trader, very unlikely to happen. The thing that's going to get you to being a consistent and profitable trader is understanding what I just talked about, market microstructure, and being informed, knowing what's going on, knowing why certain moves happened, and knowing when the market is out of kilter with the fundamentals, and knowing situations where new orders might come in that may be in your favor in correcting that informational inefficiency, right? Like if I'm one of the first people that hear that Iran oil supply is definitely going to be coming online, then I can come in and I can short oil, right? And if I'm fast, and if I do that within the first minute or so of it happening, yeah, you made money. You made money, right? That's what's going to get you there. Be informed. Be informed. Which is kind of hard because that means there's no trick, right? You just have to keep following the market day by day and we'll read all the news and know what's going on. So there's no holy grail. There's no right. The only holy grail is hard work and being informed. Mm-hmm. By the way, where did you post the little? You said you posted a chart somewhere. I didn't see. Mm-hmm. Okay, so I was talking about GDP. Although GDP is a widely used metric, there are other ways of measuring the economic growth of a country. While GDP measures the economic activity within the borders, gross national product is a measurement of the overall production of people or corporations native to a country, including those based abroad. GNP excludes domestic production by foreigners. Gross national income is another measure of economic growth. It is the sum of all income earned by nationals of a country. Yeah. Okay, so let's look at how those ones went. GNP, GNP, Fred. Okay, so gross national product is actually higher. GNI is the one where I think you should expect it to be higher. Oh, that data series isn't produced as often, so we don't really know where it is yet. It's like a yearly thing. Hmm. Hmm. I think we still come back to real personal consumption expenditures. That it came from another thing, right? Yeah. I want to put this one in a separate thing. I make a TikTok about this. Real personal monthly, quarterly, annual. So which one did I get here? Monthly. Yeah. Seasonally adjusted or not seasonally adjusted. Um The monthly is seasonally adjusted. I can't get it monthly with it being unseasonally adjusted. But I can do quarterly. Yeah, that's what I want. Yeah. Oh, now I see it, Octavius. Not sure it's the only factor to the volatility, but the Iran deal is a good thing for the economy for sure. Yeah, well, I mean, the liquidity is still really shit, right? I do think that some of that movement was news headlines, though. So that's pretty crazy. Because when you look at it from here, and then you look at the non-seasonally adjusted one, it's like, what? What is going on? That's pretty crazy. Quarter 4 was pretty crazy in terms of consumption expenditures. Was pretty high. Although we'd have to come in like if we do a line here. You can kind of jerry rig it to be that maybe it's not insane at least, right? You could say it's not insane at least. Actually, but it is higher. This other one though is not as. This other one, you really get a good picture of it. You see, okay, but it is just like at a higher level. But what happened? What happened? I'll tell you what happened. Export of goods and services just completely cratered. Because why? Because of Supply constraints. Oh, that's so interesting. So the reason that the metric that they are looking at is being flawed is because of the supply constraints, because the supply constraints are hurting our exports of goods and services too. Jeez, of course. But was that really the case? Why? Well, let's kind of look. Let's look for some news stories. U.S. exports, and then we're gonna come to news, and we're gonna see U.S. exports decline. Let's say. Let's read this Wall Street Journal. Hopefully, it will let us read it and not say, "Ah, you have run out of your articles for the month." The U.S. trade deficit increased 27% last year to an all-time high of $859 billion, underscoring the strength of the nation's economy and its continued heavy dependence on imports from China and other countries. The trade deficit in goods and services well exceeded the previous record of $763 billion. The Commerce Department said Tuesday annual trade balance records, which aren't inflation adjusted to date to 1960. COVID showed how desperately dependent we were on foreign products, and today we are just as dependent on the same supplies and suppliers coming from China and other countries. I see. So they're saying that the reason that our exports have declined is because people don't have the materials from abroad to make things. Maybe I should be taking a long year in treasuries. I don't know. I don't see a clear reason necessarily. I think it's just the Iran news. Do I think I should see higher rates on the Iran news? Mm, from a fundamental perspective, I think that the Iran news kind of really means that we are just more likely to follow the path that the Federal Reserve has set out for us, right? If we don't have like crazy oil going on, then um, that really helps us avoid this stagflationary, recessionary um, setup that a lot of people are afraid of, right? So if that kind of takes at least one of the recession scenarios off of the table, that again means that we're more likely to continue to follow the path that the Federal Reserve has set out for us, and we'll have higher interest rates. Whether that justifies us having a significantly higher interest rate today, I'm not sure. But just the piece of news is bullish and should mean higher rates in general. Is just that I cannot sort out necessarily how many orders are going to come in off of that. The news has been out for some time, so I don't know if trying to take a further run off of that really makes sense for me. Another problem that we have, two problems that we have really. One is that the S&P 500 is going to be opening up, and then we're going to have some economic news at 9:45, and then at 10 o'clock we're going to have even more economic numbers. So um and then on top of that, the price that we're getting at the moment isn't super great. Although 8.89 wouldn't be terrible. And we got Powell speaking today. So I'm just going to kind of sit back on that a little bit. Oh, wait. This is personal consumption expenditures. And really, what we would want is real personal consumption. Only annual is non seasonally adjusted on this data series. Okay. This is definitely the data series that you want, right? That way, when we adjust for inflation, we can see that personal consumption is quite high. Oops. And we could come in and we could try and do a well, that kind of does suggest though with that particular chart kind of does suggest that hey, you know what? And that also means this other one that was not real where we got the where it really like takes off. This one, this non-seasonally adjusted one. The reason it's doing that is because inflation is really taking off, right? So really real personal consumption really would be a key metric. Monthly. There you go. Hmm. The big thing that I'm coming at though, because the reason I'm doing this research is because I saw a TikTok where they're saying, nah, the inflation has absolutely nothing to do with the government stimulus. And I'm like, yeah, it definitely plays a factor. Okay. Prices would not be as high as they are if not for the government stimulus. We might be in a recession, but okay. So how do you prove that? Well, they say that the underlying thesis of the inflationary people doesn't happen because the output gap didn't go positive. Okay. Well, the problem with using the output gap there is that the output gap is really just GDP. It's current GDP compared to potential GDP. Right. Now, real disposable personal income, you should see increase. Yep. And just personal income. And pretty much the same data series. Personal consumption expenditures on durable goods. Personal consumption expenditures on services. Wow. Oh, wow. Like, look at that. Now I'm thinking about what I want to put in this TikTok. Oh, I love a good economic argument, guys. I really do. I think I should bring that down for now and think about the possibility of 2% today. No. 2% is too far away still. Yeah, 2% is still way too far away. It is a pretty decent downtrend that you got. Although we should note that we're still quite a ways away from the overnight lows. Overnight lows and oh, I guess it's not even overnight lows, it's yesterday's lows. Yesterday's lows was 127. But here again, what makes me think that it's going to go down there? What information do we know that could help us predict future orders? Well, we do know what the sentiment is and what the trend is, and I think that that's a really important component. Um, we're more likely to see interest rates rise here because of the current sentiment in the treasury market here. We also know that we're going to get some economic numbers here, although I don't really know a whole lot about what those economic numbers are likely to be. Well, let's come over and look at them, shall we? Market Services PMI final, looking for reading of 56.7, previous reading of 56.7, and one would think that those would probably be either be in line or maybe slightly under. Then we get non-manufacturing PMI. They're looking for a reading of 61.1. Well, if that one came out higher than anticipated, either of those came out higher than anticipated, that could be another shock to the Treasury's bot. The other thing that we got to look at is US ISM non-manufacturing prices paid. That's another one. They don't have an estimate for that, but that was 82.3 before. US core durable goods revised. We're looking for spot 7. So most of these metrics that we're seeing come out here are ones that have been fairly stable as of recent. So I'm not sure that I should be expecting some really big change from those economic numbers, although I do think that we should expect to see some shuffling around and so forth. Another thing we got to think about here is, well, there's the S&P 500 just starting now. Looks like the at least the initial move is to the downside, but it's very tepid. Oh my gosh. Excuse me. It's very tepid. You know what we never did? We never started streaming to ShareVision. We want to keep doing that. I want to be building this up on ShareVision. Yes, we should be. Title. Iran deal rumor. Should we call it a rumor? We shouldn't call it our Iran deal news crushes oil. Let's say that. Great stream. There we go. Oh, by the way, I didn't see you say hi there, Ish. There we go. Start stream connected. Good deal. Okay, so I do think that we might be able to sort ourselves out a long in some location here, but I don't know if 8.5 is really the right spot. 1500 market buy order, or market buy orders order at 118. 100 and oh, that's way down there. I can't see that far away, but you say it's a 1500? I don't know if it's really that unusual. Like a really big order in ZF under normal circumstances would be like 4,000, right? something that's like 3 times the current size on there and at such an even number, I don't think that I can really make too much of a conclusion off of just that. No. Now, what I am seeing is that they're having a really hard time keeping this up at all. So there is a little bit of a hole between 8 and 9.5 in the 10-year Treasury, but buyers to pick it back up into that location just aren't coming around, and the market makers on the bid side are pretty weary about doing anything. What about PMI? You say 54.7. What is that about? What do you mean? Are you talking about the US Market Services PMI final? Or right now, the expectation is 56.7. What, you think that it's going to be 54.7? Is that what you're saying, Lucas? Because if it is 54.7, then maybe we should sell this, right? maybe we should sell rates rather. That might cause rates to come back up a little bit. That would be a pretty decently sized miss. By the way, S&P 500 not so happy right now. It is. I would say that the degree of imbalance in the volume here today is it's much more mixed than it has been in days past. Okay, you think it's out? So what makes you think that it's going to be 54.7? That's a pretty bold claim. You have the inside scoop. Are you sharing with us the I want. Gotta know. I can't just. I mean, I know. I trust Lucas. He's been around probably longer than anybody. I think he understands what's going on, but I don't know if I can just. You can just straight sell that. Hmm. On the other hand, I don't know if how big of an impact that would actually have. I have a really hard time sorting out if that composite, because I mean the 7:45 news, sorry, 9:45 news, the market surveys tend not to be as influential, right? They tend not to be as influential. So if it's a miss, well, and let's come back here. Let's come to Forex Factory. And let's just kind of try and game this out a little bit. This news right here, the market final services PMI final, a difference of about 2 points is a larger than anticipated than usual gap. It is a larger than usual gap. This one, they came out 64.9, and this one was 62.5. So 2 points. That's about on par with the largest miss that we've had. That was in May of 2021. Maybe the puppy can choose between the two. I see what you're saying. Okay. But that would mean sorry, what was the number again? 54.7, and we're expecting 56. Okay, so when was the last time that we underperformed this measure? I can't see. I'd have to go back. I have to go back. It hasn't happened in a long time. They tend to outperform this measure on a whole. But let's go back to May of 2021. All right, and then fine. There we go. Apply settings. There I gotta find market. This would be a business survey, right? Yeah, here we go. Final services PMI. Okay, so that was on May 5th, 2021. So May of 2021, somewhere in here. Well, on that day, it was relatively constrained in the treasury. And if we go to ES, daily ES, May 5th, 2021, that was a really, really constrained day. So I'm going to say that doesn't give me a very confident trade. They're starting to build more volume at 08.5. I think given that situation, that the oil news still ends up being more influential on the treasuries. Yeah. I think that's kind of where we come out at. Hmm. Oh, Melinda Gates has had her first major interview since the divorce. Hmm. That's the thing with correlations that folks can't seem to grasp. They change all the time. Oil might be more in play at the moment. I totally agree. And like here again, my I would think that oil would have a tendency to undershoot here. I think that oil might undershoot here. Believe it or not. Like, oh, actually, let's do a comparison here. Okay, the U.S. imported 209 barrels per day of crude and 500 barrels per day of other petroleum products from Russia, according to the American Fuel and Petrochemical Manufacturers Trade Association. But Iran can pump 2.5 million barrels per day. Okay, so that's 10. That's like 12 times more than the oil that we're getting from Russia, right? So if I come back here to the chart and I look at like oil, let's see here, which one? This one? Well, the largest, furthest back I get here is oil, but this completely erases the oil premium, which means that we probably come back to here and below. Probably. So I think that we might be seeing like the 70s again. Oh, geez. Hold on. Um, Maybe I should trade this. Maybe I should trade this, guys. I don't know. What do you think? Bum, 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 bum. Oops. Got about 1 minute here before this next news. So I'm not going to try and take a trade directly on that. Oh, I can show you the screen here though. Okay, on that. Oh, very interesting. Very expensive. So puts. Um. Hmm. Man, that's so interesting. Hmm. I don't think it makes sense. I don't think the trade makes sense for me. Maybe somebody else can take it. When I did this before, I think I bought 55 strike calls, which were only like $1 or $2 off on USO for about $100, I think. So if I was going to do something similar and I was to buy puts at like 72, for instance, I'd have to spend $400, which I would rather just spend a teeny little amount. So the implied volatility that you're getting from oil right now is making the USO options. I'm not going to say that they're too expensive. In fact, I think you probably could buy a ton of them here and, well, let's say 62. Let's say 62 strike puts. I don't know if you would want April though. I think you would probably want like, how come it's not showing me May? That's odd. Why is it not showing me 8 May options for this? Well, if we come into July, yeah, then they're really expensive, right? But if you're willing to spend the money, I think that you could probably still get a pretty decent trade off of them. But it doesn't look to me like the overall price for these really makes sense for me, at least. Okay, now that news, the composite PMI, or no, the services PMI was 56.5, which was about in line, and market composite PMI was 55.9. Huh. But we did move there, didn't we? Oh, you know what? That happened before the news. I take that back. There was another run higher there. I guess 1.890 would have been a great price. But what did I miss something there? No. Let's see here. I think we need to go back maybe as far as 10 minutes. No, I don't see. It was just a move, I guess. Meanwhile, S&P 500 is dropping here. Markets are not random. Well, I mean, they're. What's your definition of random? If you can, I mean, it's not random. It's very deterministic. It's deterministic according to the orders that are submitted into it, right? From that perspective, it's deterministic. What orders are going to get sent to it? That is kind of random. That is kind of random. And there are certain things that certainly correlate to orders. But there's a lot of randomness to it too. Well, do you think that they can come back to 8.5 now because of all of that? I don't know. The thing is I don't know. I don't know what was with that. It kind of just careened down there on its own while I was not paying attention. Because I was thinking about the oil trade. That's okay. That's okay. The oil trade was worth investigating. Well, we don't have to wait for very long for the news at the top of the hour. Does order flow trading still exist? Define order flow trading and still exist. There are certainly some edges that people would trade based on DOM and the order flow back in the 2000s that are not competitive anymore. Let's say. They're not competitive edges for retail traders, rather. That doesn't mean that order flow is not a useful skill. In fact, I would argue that being able to read and interpret order flow is an essential skill to be able to understand what is going on in the market. You know, these people that they want to just look at price only, you're not going to learn very much from only looking at price. It's not enough. You have to see the interaction between market orders and limit orders. Quite a bit of a spread. Some significant steepening maybe going on here now. Which suggests that it would be better for us to buy the 30-year here. Except for that you're getting a shitty price in the micros. Well, we got about 7 minutes to the top of the hour news. Once we get to the top of the hour, Powell will also be speaking, so we might need to be on our toes. I don't expect him to say anything too crazy. I mean, he's been pretty consistent in what he says. The market was surprised yesterday by him being consistent, but I don't think that they'll be surprised by him being consistent today. But we'll see. There's still a probability that it could surprise, it could roil the markets. I think it's much less than it was yesterday. Much less of a probability. I guess another thing that we should keep in mind, I wouldn't expect this piece of news to happen until much later, probably after we're done streaming. But there are the negotiations going on right now, right? So if Russia and Ukraine came out with a peace deal today, that would really be something, right? I don't think that's very likely, but it is a real possibility. So it is a real possibility. Um, some people, especially people insiders on the Russian side, seem to sound quite hopeful about it, which I'm quite surprised about. But yeah, so far they're not willing to trade back through this gap they formed on the way down. What type of trading exists for a retail trader? I think that the best edge that you're going to find as a retail trader is being informed. That means finding information that is publicly available and that you can trade off of without breaking any kind of laws, but that is not widely known or followed in the market, and looking for opportunities for that piece of information to then pick up interest in the market and start to create more orders. That or see a piece of breaking news that comes out and get into it really, really fast. So, for instance, a really good opportunity that retail traders have today is to go short oil. I know this is a really high risk play. So if it doesn't work out, you can come back and say that I was wrong, okay? Because it is, I'm just saying this is a high risk gamble. But we got news this morning that the Iran deal is going to get done. The amount of oil that Iran produces is a lot more than what is coming out of Russia. We should also note that Russia has not stopped oil shipments. They didn't put a they didn't put sanctions on Russian oil. So what that basically means is that we're going to get a lot of oil supply come onto the market, and probably this premium that we've had will get wiped out. And you saw a pretty strong move in oil when that news happened. I think there's a pretty good chance that oil like undershoots what it should from that. So as a retail trader, you could probably try and take a swing a bit with taking on a lot of risk, but you could possibly take a swing on shorting oil. You could go and buy USO puts, for instance, or you can just go short the micro oil contract and hold it for a good, geez, $10 or whatever. You go on micros, that's $1,000, dude. Right? Being informed. You want to be an informed trader. That's what I would recommend to retail traders. Be informed. It means you got to come in, you got to read the news every day, you got to follow all of the major markets, all of the commodities complexes, even certain major stocks, and so on and so forth, and just know what's going on. And find those instances where there is informational asymmetry in the market and when the order flow is going to be in your favor with it. Informed trading is the way to go, I think. So we did have some pretty ugly sells in the S&P 500. It's okay. I mean, it was a pretty good buy before the market opened, and we're just kind of retracing that right now. Well, overall, the volume is very much a sell in ES. In the Treasury, we are recovering all of that. Sorry. We are recovering all of that decline that we had, maybe turning back down again. But the volume is kind of flat. So this just looks like another post meta order impact, right? There was some sell pressure. The pressure comes off. We get sucked back into the vacuum. We come back. So if we think that, well, we got news in a minute and a half, so I don't want to take a trade off of it. But if we thought that there's still going to be further pressure down in the treasuries and so forth, this around 05.5, well, I guess he kind of already missed some of the best prices, but this is probably an okay place to take it. The thing with informational edges, you need to be really smart to turn consistent profits, yeah? Do we really need to learn quantitative trading as a retail trader to be existable? I don't know what you meant by the existable, but I think I get the gist of what you mean there. And I think that the answer to your question is that understanding quantitative measures is absolutely going to help you, whether it's necessary or not. I mean, I don't know. It's something that can be useful. I think that you should be going for anything that you can find that you can confirm is actually useful, right? There are a lot of fallacies in quantitative trading. There's a lot of it gets abused by retail traders, and they don't understand the statistics around it. But what you can do, okay, so they're really pulling for this news. So I definitely wouldn't want to be in a trade at the moment. Okay, actually, looks like it was lower than forecast. Okay, so the services PMI final was 56.5 versus 56.7. Composite was 55.9 versus 56. Non-manufacturing PMI was 56.5 versus 61. So that might be why you saw that. But on the other hand, US factory orders month over month expected to be spot 7 and it was 1.4. Also, manufacturing prices paid was higher than anticipated. Hmm. So we got a little issue here. We had a pretty decent move down from starting, let's say 08 half, perhaps, right? And now we got news contradicting that. As such, we're able to push through it correctly. But some of these numbers are a little bit mixed, and I actually think that the direction may still be you want to be short the treasuries. But it's really hard for me to, well, okay. I'm not happy about the liquidity that I see, I tell you that much. Not happy about the liquidity that I see, but let's just let them do their thing. I might not understand the numbers here. So, okay, what's New Squawk say? Headline miss, prices also tick up. It's a very, very difficult to say which way the treasuries themselves should really go off of this. The treasuries definitely moved on that news, but it was extremely illiquid market and is still a very illiquid market. They're only putting 500s up on the DOM. The S&P 500 didn't really move much at all. Maybe moving to the upside now. Didn't see the other instruments really do anything. Well, 6J definitely spiked there with us. Some decent volume coming into the 6J today. Well, the biggest relative AMA relative volume that I'm getting today on my market analyzer is GE, which is the euro dollars. That's pretty funny. And there is a lot of interest in the treasury. Okay, so they're kind of continuing up there. 56.5 for ISM services versus 61.1. Services definitely took a hit. Services definitely took a hit. Is that what they're trading? Is that what they think matters? I kind of feel like that those manufacturing prices paid increasing is again another thing that's not very good for the bonds. I think we're still in the Federal Reserve is probably going to raise rates. Well, that move that we've had since '08 half. I mean, the spike that we saw on the news, that's the spike that happened on the news. But where we're going here, what price is doing right now, I can't read too much into it because it's just a very illiquid market. Good example of where I'm like, it's kind of essential that you look at this stuff because can you imagine if you were only looking at price, you had no clue that they're only putting 500 lots on in the 10-year? Really critical market condition that you would have absolutely no clue about. Should note Chairman Powell is going to be speaking here. Yeah, the volume that we're getting here in the 10 years is actually quite pathetic. It's just that it's so illiquid. That is very curious to me. I don't think trading floors will disappear, says American Stock Exchange President Thomas F. Ryan. Well, he was wrong about that one, wasn't he? 1998. Well, so going back to Lucas's comment, the thing with informational edge is you'd need to be really smart to turn consistent profits. Yeah. Because informational inefficiency is everywhere, it is a lot easier for you to identify an informational inefficiency, but it can be very difficult to take advantage of them. So that's one reason why I would say that first you really do need to understand order flow because you can't just say here's an informational inefficiency and trade it and make money off of it because the market may not care that that informational inefficiency is there, right? And how long are they going to go not caring about it? So you have to understand all of the forces that are potentially creating orders that day and be able to read the order flow and keep track of how those things are going at the moment, right? Um, but it's still going to be hard, right? To be consistent. That is, the liquidity is quite scary. I totally agree. The flip side of that is if you find a technical inefficiency, um, you can be very consistent with a technical inefficiency, but you're extremely unlikely to find one. Now that my son has learned how to open doors, he just always wants to come into this room. Sean Penn evacuates Ukraine on foot. Jeez. The street tweets Tesla has received final regulatory approval for the Gigafactory in Berlin. Good for them, I guess. What do you think here? I think Fed semester is speaking now. I did not have that on my schedule. Oh, it's an unscheduled interview on CNBC. Ooh. Let's see where they go here. S&P 500 still kind of looking a little sad. Maybe part of the driver that we're getting here in the treasury. I have to say the action since they've reached this like '09 half area is very, very lackluster. 10 half being VWAP. So see if they do the VWAP bounce or if they careen through it. Given the lack of trading activity here, though, I think it's probably less likely that they trade through the VWAP, but I don't know if that's something that would be really very predictive of it. So that's just kind of my gut feeling at the moment is like, yeah, I mean, it is kind of trending up, but the activity has really turned sad. Relative to how much they moved when that news came out and everything. Yeah. And I thought it was quite mixed news and a little difficult for me to completely sort out. I'm surprised that the activity based on that died down so quickly. Oil coming back here, by the way. Oil might be giving y'all a second chance to go short. Unless there's a piece of information that I don't know about. Okay, so somebody just stuck a 2000 lot at '09. That's been a while. It's been a few weeks since I saw a large order like that. He is not convincing anybody to trade it, though. That's curious. Okay, they took it. They took it. Hmm. Well, I don't know if I want. Yeah. I guess I can take that. I can afford to take another one later on, but this is a little fishy. Okay, so at that point, interesting. Okay. So the guy that bought, he ended up just hitting 10 half and 11 and getting out, and he's done. And then price fell back to where it was. I wonder what was with that. It was like somebody just really wanted to buy it there for some reason. As a highly unusual move there. That was really unusual, wasn't it? Yeah, inside bid MBO. How much was it? Was it the whole 1500? Let's see here. 1657 of it was? Jeez, dude. I mean, I really hesitate to say this because it was a 2000 lot order, but the way that that went is not the way that you would want it to go if you were trading that, right? Because he basically he put the limit order in there, and because he put the limit order in there, he got himself a worse price by hitting into 11 than if he had just split it up. The market wasn't doing anything all that interesting here. I don't see why you couldn't be able to get yourself 9 half and 10. He had to have been really panicked stopping out of a position or something like that. I don't know. This is really weird. Maybe somebody that had been really short going into this and had to puke, right? Maybe what that was. I've never quite seen anything quite like that. Have you? That was really weird. It's very weird. But you can he see here after that guy came in and traded it, market not really doing anything. We must be cautious in our approach to the situation in Ukraine, but the strength of the U.S. economy and its imbalances all indicate a purposeful removal of accommodations, says Fedsmester. Hawkish. If I want to trade 6 to 24 months options contracts, how can the DOM help me? Is the DOM mainly good for short term trades? Well, so you're unlikely to really get true full depth of market information on the options market. I think. But the liquidity available is something that you really want to pay attention to, right? Hmm. The thing is for options, especially um I mean, options make a lot more sense for a swing trade in my opinion, you know. I think that if you're doing more short-term trading with options, I think that there is a lot more opportunity for you to try and find edge based on mispricings rather than having to rely on the order flow. In treasuries here, um, they are so good at the statistical arbitrage and all of that that you're very unlikely to find a short-term mispricing in the treasuries. You get what I mean? Hmm. Howell is now speaking. I would really like to know, why is Mester on television? Why are the treasuries backing off here? Oh, okay. So we're getting a reversal of the Iran deal. That's what's going on here. Well, I think I should scratch here and rethink things. Hmm. In fact, maybe I should reverse. Where were we earlier today? Oh yeah, I think I can. Well, I didn't get a very good price. I could consider trying to take a contract at an 89, but let's just kind of chill out here for a little bit. That's a pretty big um, range here behind us. If of what I think is happening is really happening, I can afford to just try and be patient instead of trying to panic myself out by worrying too much about the price that I got. Don't think this is a situation where the price that I got is really the key factor here. This is from the Wall Street Journal. Wow, this is quite the man. They're coming back on me hard though. Fetch. Isn't it just perfect? You try and reverse, and they come all the way back 10 ticks the other way. Hmm. So to that point, will oil spike back up to the high of the day at 115 now? This market is too illiquid for me to be doing what I was maybe trying to do. Hmm. Look at the orders that went into 11 and 11 half. Okay, so this really kind of changes my view of that larger order that we saw earlier, though, right? You know, when we saw the order, we're like, well, nothing was going on. There's no reason for him to be that panicked. That probably is the case. He probably could have tried to have executed that order a little bit more quietly, but he definitely had reason to think that he needed to panic because he probably saw that news and knew that there was a good chance this treasury thing reverses now, right? Could have even been a new position and not necessarily a stop out. Excuse me. But if it was a stop out, then I would probably be doubly panicked in that situation, huh? Especially again with how illiquid this market is. Hmm. Well, I don't know, guys. I'm so very tempted to take a second contract in here, but the market is so illiquid that really just does not make sense. I'm just gonna have to try and stick to my guns here on this one. Like I could try, you know, taking a small loss here and hoping that I could get a better price later, but it could just take off after that, right? So the S&P 500 is starting to get into bearish numbers, right? Where is that in relation to yesterday's prices? Not quite there. It definitely looks like a failure of 4400. 4400 be a pretty critical level for you to see there, right? And it very much looks like they got there and decided that that was no good. So, I was speaking about energy prices at the moment. So, I think what may have happened when I took my trade was that I was kind of in the hole and we got vacuumed back. So, that was my bad. But that was kind of really more me being a little slow. But even though I might have been a little slow on the short term action, I think that in terms of what's going on in oil right now, I think that we're ahead of the market. And again, because we had such a strong move coming down on oil, this whole thing, because I mean, this whole thing was oil getting hit down, right? This is not going to be very liquid. This area is not going to be very liquid. So if oil decides to take another rung, they can very easily go back up to new highs. Now, does that mean that the treasuries go back up to their highs? I don't know. But let's just kind of see if things start to get more crazy and we're in profit, then maybe we could add a second contract, right? Hmm. Yeah. Yes, not happy, man. Not happy at all. I feel like I'm maybe a little bit too in my head at the moment, so I'm gonna try and get the right parts of my brain working here, eh? This is quite the action today, man. I really hate it when they toy around with this on headlines like that, right? That Wall Street Journal article, was it Wall Street Journal? Yeah, it was the Wall Street Journal timely report. I'm kind of sitting here and I'm thinking, you know what? I should have done the Wall Street Journal instead of Bloomberg. My whole thinking that, well, I probably should do Bloomberg because I'm more likely to come across information that I'm not aware of. I don't think that's the case anymore. I think that I should have gone to the Wall Street Journal because they have more sophisticated analysis and reporting. And at least as of late, Wall Street Journal has gotten better scoops, haven't they? What was the other one that they got a good scoop on? I can't remember. There was another story that Wall Street Journal had before everybody else, and it was like important. Oh yes, it was when the thinking in the Treasury was changing, and they were reporting about that when everybody else was off kilter. Well, market's still showing how illiquid it is in the treasuries, that's for sure. But as of yet, they're not ready to push up into new levels and try and, I mean, above 12 here, you've got a pretty wide volume till there. So, okay, ES having a little bit of a turn. Hmm. So I think that that little bit of the turn is maybe part of why the treasury is coming back here. So maybe the equity treasury correlation is finding legs a little bit. I'm also not seeing much of a change in the spread, so I'm kind of trying to think here. That seems like something that should flatten the curve, but the curve has already flattened out quite a bit today, so I don't know if I should really be looking for a huge change in the spread here or not. Oh, yeah, we're gonna get some gas numbers here, right? Yeah, natural gas. Well, it's a build. That's good, I guess. So let's just remember the big guy, he was hitting at 11. So if he was taking a new trade, how frustrated would he be? It's been about 30 minutes, hasn't broken out yet. I don't know. Seems to me like there's some reasons for the markets to move, but it's not really doing it. We kind of missed the better part of the move. Hmm, and that might be because of Powell. I don't know. That was quite a turn there, wouldn't you say? Well, there's some volume hitting back now. I don't know, man. Okay, that was a pretty strong uptick at '09. So far, S&P 500 still kind of chopping around in the lower end of the range. We would need to see a drop below like 4370 and a little bit below that before, like all of the technical levels and everything are broken. Not that it predicts anything, it's just kind of a little benchmark that I think we should be watching. It's just the next step. Are seeing some changes in the dollar here, by the way. Hmm. You can tell I'm in hawk mode on this trade now, huh? It's like I gotta see everything, make sure I know what's going on here because I'm really worried about this flipping on me again. Hey, there we go. That's a little bit better. That is starting to get a little exciting, especially in the 5 year there. Mhm. Nope, not 12 half, not yet. The 30 year is going for it. So we are seeing the flattening. I was saying maybe we get some flattening, but it'd be hard to see it move too much. It's just a gradual spy tick or two, but the 30 year is starting to lead the way here. They are ticking into 12 half in the 10 year. See if they can clear that. Because once you get into 12 half, I think it might need to be a little bit more than that, but you're starting to get to some points where some of the more technical traders kind of get to go like, oh, wait, something's going on. Oh, actually, it's at there's also going to be at 13, some market makers are going to start getting upset. Hmm. See, I think that there could be some good movement above 13. Um, but so far the market orders aren't willing to hit through. Like it's probably like this. There's a little bit of sell supply here at 13, and when they get through it, I'm expecting that there will be much less liquid through here. Let's see if I'm right. But that's based on what we know about market microstructure, what we should expect to see happen. Of course, we need the market orders to start pushing there first, right? And at the moment, there's not enough market orders to decide take the 13. So they're coming close, but they haven't actually ticked it up yet. Hmm. So like only 90 and they're not taking it, but there's probably a bit of a block order there, huh? Yeah, it's iceberging a little bit. S&P 500 taking a further plunge there. That's not enough to trigger them, huh? And they trade down 12 half. How long, hey Octavius, how long has that order at '06 been there? I didn't notice that before. Did you notice that there? Nah. '06 is kind of an unusual price to see an order like that. Okay. And they're going to do this again, I think. Okay, that time they cleared it. Didn't hold. Hmm. Powell's still speaking pretty hawkishly on inflation in his remarks to Congress, by the way. I find it really curious that oil moved so strongly on the news that the Iran deal was about to happen, and now that it's been canceled, there is not nearly as much market interest in it. What's with that? At the moment, instead, the market is more interested in the S&P 500 falling apart. Well, they're kind of right on the precipice here, so looks like they might try and make a further little dive to 65 here. Although that was a pretty good clip there, they might take a break here and or reverse first. 12 half has gotten a decent amount of volume trading at it, but they're not able to hold bids there yet. Or hold bids at 13. They put 500 up at one point, but it came right back. Oh, he says it's only been 2 minutes since that order's been there. Oh, okay. And it actually looks like it moved around. Hmm. Did he just cancel the order? Or did he move them? I think he might have just moved it because there is a decent amount of volume there at 057 and oh 06 now. Okay, well, one of the things that we've been seeing here is that on the bids side, the bids don't really hold either, right? There was definitely some profit taking on the offers up at the 13s, but then they settle back into the hole. Maybe they're trying to pick up some more in balance, and maybe they'll try and going in again. At the same time, though, given the type of news that we had, you would expect that they would just go, that it wouldn't be this long, slow burn sort of a thing. So I don't know. I'm becoming less and less confident as to whether or not we actually have a good informational edge here. And it could also be the case that well, number one, that was all of the orders that wanted to trade that particular news, and that there's wider hedging based off of uh, Powell's hawkish comments, and or maybe some traders being a little bit less aggressive or just kind of sitting out because Powell is speaking. See, they coming back to that 10 pretty easily, but there is a little bit more at 10 trading. 9.5 is kind of the seller. We're kind of in the no man's land here in the 10-year. Okay, Jennifer Jacobs says Scoop Biden is poised to impose sanctions on a number of Russian oligarchs and their families today. Sources tell, and some other person on Twitter and me, sanctions will be keeping with EU measures but broader, prohibiting the oligarchs' travel to the US and also targeting their families. News Squawk asks, has any administration official guided tomorrow's non-farms payroll data yet? Asking for someone who is preparing to fix the office non-farms payroll sweepstakes. This is a good question, actually. The non-farm payroll, the last two non-farm payrolls, we saw the administration trying to manage expectations for the non-farms to some extent. And in both instances, they said that maybe it would be bad and it ended up being good. This time, not really saying anything. Is that because they're just more focused on Ukraine? Or is it because maybe the number is different this time? I don't know. Probably not going to tell you much. So that sorting that out probably isn't going to tell us very much that we could trade off of at least. Well, I got about 15 minutes left here, guys. I don't know. I'm a little frustrated today. I think I'm most frustrated that I got such a poor price. I guess I've had chances to try and sort out a better one, but the flows not particularly in line with uh, my own thinking today. Actually, that kind of looks like a little bit more selling. I don't know. This is very illiquid in through that area. That's for sure. I suppose that's what you should expect because we did come up through that area pretty aggressively, right? On the other hand, if they do decide to buy through here, I'm sure that they could probably get up to that 13 very easily. It's going to very much depend on what the next slew of market orders are going to be. And even though we have some reason to think that it should be buy, so far it hasn't, it should have been a much more extreme buy. So I don't know if we really know what the next set of market orders are actually going to be. And then we got Powell speaking. That's another problem. News Squawk is now reporting this thing about more sanctions coming. They're a little late. I beat them on that one. Now the 30-year is still pushing up the higher end of that. That's interesting. So on that pullback, what they sorted out was more flattening. Which is good for our short rates if they continue to move up here in the treasuries. And just as predicted, they were able to sweep through that 10 to 12 area pretty easily, just as easily on the buy side as they did on the sell side. Well, geez, when you have 1,000 lots coming through and there's only 1,000 on there, yeah, it's pretty easy to move. It's pretty easy to move it right now. Although I do suspect that probably, yeah, well, so what do we got going on in the 6J? Yeah, the 6J is doing pretty much the exact same thing. Hmm. So, so it seems like the dollar is a key component here, right? Um, when the dollar started rising is also where we saw the treasury start to push up. You notice, by the way, here the 10-year is down a few clicks, but we're still doing fine over here in our position because the 30-year is up at its highs. And the 30-year did break the pivot high, or the swing high, let's say. The E-mini continues to just drop. It's a pretty ugly move in the ES. What's our next benchmark in the ES? So there's kind of some pivots of such around 43, 44. 43.45, let's say. 43.45 is kind of the next volume area from the previous day that would be a benchmark for us to watch and see how far they get. They are really starting to flatten now. The 5-year is getting sold and the 30-year is getting bought up. What's this? Metal bulletin. All of that, this talk that Russian factories will somehow be able to export is wishful thinking. Russian trucks will not go to the EU, and many trucks are leased from Western banks, and the Russians are afraid that they will not be released. As such, steel prices are surging. Let's see. Hmm. Well, I got about 5 minutes left. And coming back through that 10 area, it's a real hole there. I mean, they haven't tested this end of the range, but this end right here, they move through that quite freely. Guess that should concern us because we could see it drop back to 08 half. Okay, so the 30-year came back there a little bit. So this is kind of the point where we see if the spread is really actually going to flatten more or if they reverse here. Dollar's still within its range. So during that whole period over the last, let's say, hour, the move up, that's been, yeah, pretty good market buying pressure on all of that. So I think part of what's going on is that the market makers have just been dealing with it really well. Um, I guess they should be because it is it's folding back in on itself. They love that, right? Man, S&P 500 not happy. Just breaching 60 there. Biden administration unveils appeal process for student loan forgiveness. Yeah, that's valid. The question is the persistence of higher oil prices for inflation. Yeah. Yeah. See, I think that the issue here is that we had treasuries fall down quite a bit, I think, because of the oil news, right? Now that the oil news has been canceled out, you're not necessarily going to see the treasuries swing back super hard necessarily. But the other thing that I'm seeing in the market is that the volume is very much correlating to what we expect to see, but the prices are not. And what I see in the prices is that the dollar index, the treasuries, and oil all seem to be following each other very closely. Yeah, they all seem to be following each other very closely. Oil had this, came back up off of those lows from $106 a barrel up to 112, and now they've kind of come back to 120 10 at the moment. And based on the news and the way that it played out, I would have expected oil to shoot right back up to the highs. But that is not what is happening. I'm curious why that is the case. But it may just be that timing, like it's late enough in the session. They're not interested in trading. I don't know. I don't know. We have credible information that indicates Russian forces are creating lists of identified Ukrainians to be killed or sent to camps following a military act. That's so awful. So awful. All right, folks. Well, maybe when we go and the European session closes, that often has a large impact on the market behavior. It's also, again, the S&P 500 doesn't look so happy, and that could help boost the treasuries a little bit. But for now, the treasuries, I guess if you were scalping for a tick or two over here in the 10-year, wouldn't be too bad. But yep, don't know what to say else besides that. I'm gonna say it's just a choppy market. All right, guys. Well, I am going to close things down. Tomorrow, big day, we've got the non-farms payroll, right? And that could really set the mood for the next week or two. So I will see you guys then. Thank you for watching. Make sure you give this video a like. Actually, I was going to say it was a little bit lighter viewers today, but we're still up in the 20s. So I appreciate that. Thank you guys. Stay profitable, friends.